We did get a record high on the Dow, guys. Let's get to Bob Pisani. Morning, Bob.
Good morning, guys. Happy Monday. It's a modest open, but the internals look great. Advanced decline line has been strong for the last few days. We got a lot of new highs on Friday. We're getting a lot of new highs today. There's very little to dislike about the markets right now. Just take a look at the sectors. It's the reopening trade that's leading, and that is appropriate. But we're also getting tech doing okay. There's retail, industrials, the reopening trade. Semis is the question is tech growth going to come back in a big way? It's holding in very well. Banks, and you see energy. Energy's been a little flattish recently, but it's had quite a move on the upside. So overall, not bad here. Reopening stocks, a lot of them at new highs. In fact, the new high list is really led by the reopening groups. A lot, of course, the travel names like American and Carnival and Hilton. You also get the restaurants, some of them at new highs like Darden. You get some of the material names like Mosaic Company at new highs. These are all, again, reopening plays that are moving. So where's the markets right now? Here's why I think investors have very little to complain about. We have a 13-month high on Treasury yields and a record high on the S&P. Whoa. So maybe the market is finally recognizing higher rates are due to stronger economy and not runaway inflation. That's the interpretation of this. Reopening stocks are leading the markets. Technology is stabilizing and not selling off. That's good news here. So as far as where the money's going, the stimulus check, a lot of notes over the weekend here. Mizzou's got a very interesting note out. 10% of the stimulus checks, $38 billion, will be used to buy stocks and Bitcoin as well. 40% of that of investors, of people getting stimulus check, plan to invest the money. Bitcoin is the big popular thing, 60%, but also stocks. The bottom line is this is interesting, but it's not an awful lot of money compared to a $40 trillion stock market, which is what we have right now. Finally, are you ready to invest in a fear of missing out ETF? Everyone's trying to figure out where the markets are going. Everyone's confused. We have reopening stocks doing well, Bitcoin doing well, Reddit stocks doing well. Here's one that's in registration right now. It's not trading yet, in registration, that's going to try to get all of that together. They're going to try to own stocks, SPACs, ETFs, derivatives, the whole thing. It'll rebalance weekly. That is quite a feat there if they can pull that off. And they'll use trend following and counter trend techniques to do that. So, Carl, what they're going to try to do is use standard momentum metrics to follow what's hot in stocks this week, but also on a counter trend, try to own stuff that's out of favor because that's the stuff that does well when you get a counter trend rebound. We'll see. We're going to have this fellow on who's doing this FOMO ETF on halftime report at 12:30, get a little more details on that. But it's really trying to capture the zeitgeist there.
Shepard Smith here. Thanks for watching CNBC on YouTube.